Good morning, everybody. It's February the 7th, and I just want to do a quick recap of today's session and highlight the most pertinent points. So, if you're a part of my Discord and you were part of my live this morning, you will know that my long-term bias has always been to fill this weekly gap, right? So, this is the weekly opening gap from the Friday close to the Sunday open. And so, if we just have a look at that on a lower time frame, it'll be a little bit clearer. So, as we can see here, we have the Friday close and then we have the Sunday open, right? So, that's the weekly opening gap. And price hadn't completely filled it, right? So price was likely to, go up and refill it. We also had this price leg here, which had only been offered on the sell side, right? So price had only been offered on the sell side, but it hadn't had a chance to rebalance back into a premium. So this is the high of this fib, and this is the low of this price run, right? So at no time had price got back above the equilibrium price, right? So anything below equilibrium is considered fair value. Price hadn't retraced back into a premium before heading down, right? So this price leg hadn't been rebalanced. So we had further confluence, right? So we had this price leg that hadn't been rebalanced. We had this weekly opening gap which hadn't been refilled. And for those of you who've seen my previous episodes, we also had this reclaimed order block, right? Which is a seriously strong reversal indicator, and it's a market maker's buy model, right? Depending on which side, whether you're going up, whether you're going down, you'll see these, right? And so this is a key signature that the market is accumulating, right? And at no point since has price broken that reclaimed order block, right? So we can frame the context that every time the market dips down, it's just reaccumulation. And if the market is reaccumulating this amount of longs, I can guarantee you that price is going to be aggressive when it expands away, right? And so then what we're doing is we're looking at the calendar, right? And the calendar is we had Jerome Powell speaking at midday. And as we know, Jerome Powell, whenever he speaks, he's a money printer, right? Price moves rapidly in either direction, right? So ahead of that, price was anticipating what he was going to say. So it was hesitant. And hesitation causes this horrendous whipsaw price action. But if we had framed our long-term context, which we did in our Discord, that price was bullish, likely to head up to this weekly gap fill, we start accumulating when the market is accumulating, and we do not get concerned about this whipsaw price action. This is all designed to throw retail off of the move, right? They do not want you to be part of the move, okay? So this is all designed to throw you out. So you have to frame your context, in your bias context, and stay true to that until it becomes invalid. So what was I looking at? This pink line here is consequential encroachment of a 15-minute rejection block, right? So if I just take you to that piece of price action now, if we look at this wick here, which is a 15-minute candle, and I always look at the 15, that's your bellwether, it sweeps all of this liquidity, right? And we have this long wick down candle that's left behind. 50% of that is consequential encroachment. So price will likely to return into that before expanding higher. This is a rejection block, okay? So what happens during the morning session? Price chops around, but at no point does it hold below consequential encroachment of that 15-minute rejection block. So you'd be looking for entries in this area and accumulating and not getting caught in this whipsaw action, knowing that you are targeting not only these relative equal highs, and there's lots of them which were left, right, during the London session. We had look at one there, all equal highs. We had two here, equal highs, right? Price is likely to head up and reach those. Not only that, above that we had that weekly gap. So there was a lot of confidence in your court in order to take this and be confident to enter your trades in order to hold for them long. Now, if you were wanting to wait, you could have got back on this second entry. So it fell back into an OT zone of that price leg. And what did we have inside it? We had this breaker block, right? So we had the low, the high, the lower low, the break through that high, and it came back and retest. The top green candle, the last up close candle, is your breaker block, right? So price hit that, filled it to a tick, and then expanded higher. You could have decided you wanted to wait for it to fall back into this OT zone, but price didn't want to allow people to get back in, right? They wanted it to run off. So what did price ultimately do? It blew through the weekly gap fill, and it ran up to a mitigation block up inside the OTE zone of this run, right? This run offered to the sell side. So if we look at the 5-minute, inside it we have a mitigation block. We have the high, fell lower low, and then a failed swing high, right? This becomes a mitigation block, and it's inside the OT zone, so it's inside the premium of that price leg that I was talking about, right? Price ran up to it before rejecting heavily, right? Rejected heavily. So that is my session review of price up until that point. Price has obviously come back, swept these lows which were formed during the sort of AM session, and it has, in my view, potential to run up to this 4225. Now, I might sound crazy, But this 4225 has always been my target for those who have been watching my videos, and that's because we have a huge volume imbalance on the daily. So if we look up here, this is the volume imbalance, right, on the daily, and now is a good time, for it to run up, on the news that Powell's has come out with. So that he didn't give any sort of inconclusive information, and the information they did provide was pretty mute, right, which is positive for the market. So I can see the market makers wanting to go for the throat and wanting to run this up. That being said, I'm not taking any more trades, but I could see it run up there. Anyway, I hope you found that insightful and useful, and as always, if you have any questions, please drop them in the comments or reach out to me on Twitter. Until next time, take care, bye.